Alrighty, so I'm going to go straight to the point. In this video, I'm going to demonstrate to you here on the charts why FVGs are absolutely pointless and there's no sense in trading them as support and resistance. I'm going to show it to you here on the charts, and I'm even going to show you examples from all of the ICT people from Reddit that are showing how powerful the FVG is. I'm going to show you that it's got nothing to do with the FVG. When it does look like it acts as support or resistance, that's not what's going on at all. So let's get into it. Also, at the end of the video, if you want to actually see some ICT kind of concepts that actually work and that are way more simplified than all of the noise that they like to put on their charts, just stick to the end because I'm going to show you some examples of ICT style concepts that actually work, liquidity sweeps or stop hunts or whatever. So let's start with this one right here. So here, first of all, we have an uptrend. We have a fair value gap right here, okay? And what happens? We have a little level of support here and we slice right through the fair value gap. So clearly itself is not at all support or resistance. What does become support or resistance is this right here, this range here where there was a battle between buyers and sellers. Eventually we break out. What do? We retest it and then we go up. But it's got nothing to do with the FVG, and I'm going to demonstrate it some more, of course. Retest an area, a range, where there was a lot of exchange between long and shorts. Retest it, the buyers win again, so to speak, and then we go right back up. We fill the FVG, we just slice through it. It's got no power. You know what? You look at this fixed range here of volume, we see a lot of volume here, but here there is zero volume in this area. So of course it's going to be sliced through, okay? Another example right here. This is nice because let's just look at this now. It looks like the FVG got respected, right? Huge selling power here. We kind of range, we go back up, we retest the FVG, and then we go back down. But let's look what happened to the left. We actually had a range here with a lot of volume. If you have this fixed range, we have a lot of volume here within this range. We break up, we slice through it, but then we retest this. We're not retesting the FVG, it's got nothing to do with it. We're just retesting a previous area of support resistance. We're just retesting a previous range, okay? And then we go back down. And you can also pull a Fibonacci level and you would have some extra confluence. We have a golden zone Fibonacci level. That's interesting. But again, the Fibonacci itself doesn't really matter. It's extra confluence if you want. What matters is this point of control, this just area here with a lot of volume, okay? Another example. What did we have here? We pushed down. You could say there was an FVG here. We didn't respect that support. We don't have to respect support and resistance, obviously. And then you have what you would call, I guess, an order block here, which I don't agree with the terminology, but it's just an area that was strong support. And then we bounce from it, okay? Now here, big, beautiful fair value gap. We do have an attempt to bounce, but we're bouncing from this area of support here. Retest this, kind of the top of that support, but we're kind of retesting this area also where there was a bit of a range. We push up, maybe some FVG people were like, okay, we kind of filled it, now I'm gonna go long. Well, actually it's kind of more of a trap really for FVG people because whoever got long in the middle of that FVG, boom, got stopped out immediately. Now we slice through it. What do we bounce from? The point of control of this range here, right? This was a gap in volume, so we slice through it, and then we bounce from the point of control of this range. Look at that wick. Look at that wick, right from the POC, from an area of high volume. It's essentially the opposite of the FVG. When we react from a level, we react from a level with high volume. Levels with imbalances, FVGs, are levels of very low volume with no support and resistance. So we actually slice through it. We do the opposite of what they want to do. It's not support and resistance, it's the absolute opposite. Here, again, beautiful FVG, right? Textbook. We push up into it, we reject, oh, we're respecting the FVG. No, let's look to the left. Look at that little range here. This is a range where we had, again, battle between longs and short. We went up, kind of retested it as support. And look at that red line here. This is the point of control of that range. Look at that. Look at that. I mean, come on. Nothing to do with the FVG. It's that range that we're retesting here. We broke through it, and now we're retesting it. And also, again, you can have a Fibonacci level in there if you want some confluence, but forget about the FVG. It's all about the ranges. It's all about this price action, not this price action. Now, FVGs, if you want to bet against them, we can go back to some of the examples here. Yeah, here you have a gap in volume. Look, all of that gap here, you have no volume here. Not a lot of volume because we kind of went straight up, and not a lot of volume here. So if we actually, so on the lower time frame, when we went down here, maybe on the 5 minute or even the 1 minute, once we closed below this range here, you can bet for sure that we're gonna slice through that gap. So you can take a short again on the lower time frame. Huh? If we close here, I don't know, put your stop loss here, and it's not going to be a very interesting trade, but you can bet that we're going to maybe bounce from that point, but we're going to fill that gap. That makes sense, sure. Okay. Now let's get into the real, like the ICT people that are sharing their trades and trying to show how great FVGs are. Now here you have this fair value gap, which happened to the left, so we don't know the price action, but they think that the fair value gap got respected, we bounced, and then it kind of became support, resistance, and it's all because of that tiny little fair value gap that happened earlier. Well, no, I can guarantee you, as I've shown on other examples, that maybe there was a fair value gap to the left, but to the left more of that fair value gap, there probably was a range or some previous support and resistance, but nothing to do with the fair value gap. Here, daily reminder of the FVG effect. Okay, let's look into it. So we're going up here. So I guess we were in a downtrend. We kind of reversed. Maybe that, by the way, anything else from the ICT stuff like liquidity sweeps and shift in market structure shift, a break of structure, that makes sense. That's just basic price action. And it's not even ICT stuff. It's just rebranded, but it's very basic stuff. But the FVG part of ICT is just ridiculous. So here, the guy has his FVG here. We're changing structure, making higher highs, higher low potentially. He wants to go long, that's fair. He thinks that this is price action filling the FVG and retesting it. No, let's zoom in a little. This and this is not respecting, it's actually slicing through the FVG. Once again, what it's respecting is this. Look, support here, support. We break through, it's resistance here, resistance again, resistance, breakthrough, support, retested a bit lower, but it's just a big area here. This is an area of support and resistance. Eventually the longs retest it once again, and then we go up. That's what happened there. Nothing to do with the FVG. It's support and resistance. Here, tiny little FVG. You think this is what's like influencing the market? No. You can see that we went up here, created a little range. You can see these two wicks here. It's difficult to kind of zoom in. Maybe I can. I don't know. Wick, so resistance. We go up, support, two more wicks here. We go down, reject from it here a little bit, then retest it, wick, and that's what's going on. It's this level that became support, resistance, then support, then resistance again. Nothing to do with that tiny little FVG. Here again, so this is interesting. Now the FVG is not getting filled, so what they're saying is that the bottom of the FVG is being respected. Look at it, guys. The FVG is being respected. So whatever happens, if it gets sliced through, filled, and then goes back down, it's one version of the FVG strategy. If it doesn't get sliced through and then it goes back down, well, it's another kind of FVG that gets respected. They always try to make it work. What we're reacting to here is this resistance, this whole, all these wicks were resistance. we break through, it becomes support with this wick, they try to go higher, they fail, we break through it, create the FVG, and then it becomes resistance once again. That's all it is, support and resistance. It's just an area where traders, the market is trying to figure out, okay, are we gonna go through it or not? Are we gonna respect? Are we gonna sell from here or buy from here? Nothing to do with the FVG itself. Here, the FVG gets partially filled. They're like, okay, it just got respected. No, it was support here. You can see it. It was a small range, and we have the bottom of the range here, and we're respecting these previous wicks here. It's just an area where we were support, and we became resistance. And I mean, I can go on and on and on. Look at this one here. So we break through, we create the FVG, we go up, we fill the imbalance, and then we go down. No, we're retesting this level here. We had a lot of sellers that came out of nowhere here, a lot of sellers, and we're retesting. It's like, okay, are the sellers still there? Is there still interest in this area now to go back and sell? And that's what happens. We're just retesting this range here. And if you pull a little fixed range, you're going to find that probably this wick here reacted to the point of control of this range, most likely. And this is all the noise. This is all the noise. And again, that's not even a lot of technical analysis. They can go way more. Look at that tiny little FVG, and they say that's what's being respected. No, you had a range here, dude. You had a range here. This is what's being respected. There was a big battle here. We had huge buyers. You could call it an order block if you want. I don't agree with the terminology because order blocks you'll find on Bookmap and you'll find on the order flow, but you can't see it on the charts. So it's a range that is retested, and then we go back up. That's fine. Okay. Here, look at this tiny little FVG, and they make it about it. First of all, it gets so-called respected here, right? And I don't know if you can even see this. I can't open it bigger. They say, oh, it's getting respected, then we go down, right? No, that's not what's being respected. It's this level of support here, resistance flip, okay? And now it's a perfect example because when it gets respected at the bottom, it's the power of the FVG. And when it gets sliced through and we actually go above it, it's still the power of the FVG. No, we're just retesting a level a bit higher here. Now, this little order block, if you want to call it that way, but it's just a range here, an area with a lot of volume, so we're retesting that. So you see, this is a perfect example. Whether it gets respected or not, they're going to make it about the FVG, when actually it's what happens to the left of it, the support and resistance. Now, okay, showing you what some actual like ICT stuff, even though it's not even ICT, it's concepts that are long before ICT. Let's look at some liquidity sweeps, because I do like these kind of things. I'm going to use liquidity sweeps, right? Stop hunts with support and resistance. That's always the basis. It's support and resistance. And then within that support, if you can get a little liquidity grab, that's beautiful, going with the trend or here at the bottom of a range. So here we're on the 1 minute here, by the way, but this was a 1 hour support that started here. Okay, so I go to the 1 hour time frame and I draw my 1 hour support. You can see we retested it, retest it again. Eventually we get that little liquidity sweep. We take like, can I zoom in here? Yeah. We take this low, and then we reclaim that. We kind of close below the 1 hour. We reclaim it with volume. We have some strong buyers. Okay, you can take a long there. Eventually we retest that level and we go up. Okay, that's an interesting trade. Liquidity sweep, why not? That makes a lot of sense to me, but at a level of support and resistance. It's like the FVG is not the FVG, support and resistance, that's what matters. Here, to the left, there was a level of 15-minute, in this case, support. We go into it, and at the same time, we're taking the stop losses of these guys, again, right? Grab the stop losses, retest that level of previous support. Now we get some volume, you can enter from there. It's nice to have that little so-called liquidity grab, that's fine. You see how simple this is? This is how simple trading should be. You don't have to go through all of that stuff. And again, that's pretty light. That's pretty light for an ICT chart. They like to add a lot of BS, you know. Okay, here again, liquidity grab here, if you want to call it that. And we're retesting the high of kind of this range here. But more importantly, we had a 15-minute support, kind of fake out below it, trap some shorts, grab the stop losses, and then we reclaim it. You could have entered from here, by the way, and then, I would have rather entered from here, but it's fine, okay? Liquidity grab, reclaim of support, that's a great idea. That's a good trade, simple. Support resistance, liquidity grabs, if you want to add that, that makes a lot of sense, okay? Here, what did we have? This one is a bit different. We kind of trap some shorts here. I wouldn't even say it's really a liquidity grab of these guys, but if you want to call it that, we kind of trapped some shorts. We have some shorts failing. We probably had an area of support resistance to the left. But yeah, we had the 15-minute support resistance there to the left, which was broken through and then retested, okay? Where was I? I think I just did this one. This is just a bunch of examples all together. I think ICT would call that like trendline liquidity. No problem with that. We go down, we kind of grab all these stop losses. Eventually, we grab these stop losses, and then we have some volume back, some buyers back with the uptrend. You see here is a failure. Of course, stuff fails all the time. Liquidity grab. We had a level, I think, of 15-minute support. Here it kind of failed. You would have broken even, but you had a nice level of 15-minute support here. And we had the lows. We grab these lows, and then we go back up. Here, 15-minute support. We grab these lows here, these little lows. We don't grab all of them, but we grab some of them there to the left. And we have some volume back up, some buyers reclaim that 15-minute support, and boom, you go up. That's a simple strategy. You don't need to be doing, you need to be doing hours of back testing, that's for sure. But you don't need to go deep into ICT. It's overcomplicated. First of all, it's remarketing, rebranding concepts that have existed forever, such as stop hunts and sweeps and stuff like that. And then it's support resistance. So draw your support resistance, then wait for something to happen around there. You can draw your lows and your trend lines of liquidity. That's absolutely fine. But that's it. Keep it simple. All right, that's enough. That's enough for it today. I hope that makes sense. I can't do better as a proof. I'm proving on my charts, and I'm proving literally on the ICT people's charts and how proud they are of their FVGs. And just, I think it's so simple to debunk. I'm not particularly a smart guy, but it's so obvious what's happening, support and resistance. It's like, that's what it's always been in trading, support, resistance, and liquidity sweeps, and trapping shorts, trapping longs. For sure, but FVGs, I think it's really ridiculous. I think I've done a good job proving it to you. So that's it. If you want to look at some other more simple strategies that make sense and that work, check out my other videos on my channel. And I hope you guys have a great day.